This is Rod Kusin, Spooman for Risk on June 4th, 2019, all times on the Charter Central Standard Time. We haven't made a video in a while, and I just wanted to show you something about the composite market profile that we just happened to look at this morning and wanted to draw your attention to where we expect this market to go. Up to about 2788 is our expectation before it goes any higher, and we think we're going to hit that target fairly quickly here. But understanding how to plot the composite market profile is key to being able to get the appropriate upper lower value areas as well as the point of control. So how do you go about choosing the pivot date? The answer to that question is very straightforward. Looking at a daily chart is the easiest way to pick out the pivots. And it's just that simple. When using the composite market profile, we look for a low pivot, not a high pivot, a low pivot. And so if we were to just look at 2019 forward, just before we changed into 2019, back in December, as you can see here, we had a low pivot. Now, in order to pick up the volume on that date, we have to move the pivot date prior to the actual date of the pivot. Otherwise, we're going to start at the close of the day. We want to start prior to the low pivot. So we're going to move this to 12/24, 2018, and then we'll pick up that volume. Now, you could move it back a day before that, but you don't want to move it back too much. But you want it to be definitely prior to the low pivot. So here again, we had another low pivot in March 2019, so we back it off one day. Here, we have a low pivot, and we backed it off 2 days. Now, part of the reason for that, sometimes the indicator has difficulty identifying the date, especially if it's on a Friday. Okay, and this particular day, 3/22, is a Friday, and for some reason we couldn't get it to generate the volume using that date. Sometimes we can, sometimes we can't. Don't know what the reason is for that bug. Nevertheless, we backed it off a couple to the day prior to that, to the 21st, and then we were able to pick up the profile. We also had a pivot over here. Okay, that was on May the 13th, but we're going to remove that now because that low pivot, of course, was exceeded by the low pivot that just occurred on June the 3rd. So we're not going to do that. So we would move it to May 31st to pick up this low pivot. So the question now is, where is this headed? So when we go to our composite market profile chart, you only see one particular profile, but what we have actually in this chart, we have all of the major pivots back to 2014. Okay, if you just click on this, you can sort it all the way back to 2014, but they're not showing, and that's only because we haven't got the historical data on the screen. Okay, we're only going back a month. And so the most recent profile shows us this particular profile with a low value area at 27.98. But supposing we go back 3 months, all right? Since we've already selected the pivot dates, and now if we just look back 3 months, we see that we've got a low value area here at 27.8825. That's our target. Okay, that's the lowest value area that shows up based on the historical low pivots in the past 3 months. So that's our target. So we went long earlier on this morning, and we're holding that trade with the expectation that that is going to get hit. Now we'll be watching the premium, of course, to see for evidence of divergence, but that's, you know, that's a clear target. Now, what is that based on? All you have to do is just highlight that, go to Format, and then it'll tell you this is based on the low pivot of March the 7th. Okay, and that's how you do that. So that gives us our target. Now we have on this particular screen the daily market profile. We have a indicator called Divergence Hunter, excellent indicator. We've also placed on this screen an indicator that we modified, which has been very, very useful in determining divergence on the premium. It just shows up so very, very well. Now this is a 5-minute chart, by the way, so it's just giving you the major picture. But most important is the moving average. Now we have that moving average set to 18 on a 5-minute chart. That works. You can, it really doesn't matter exactly how you set this up, all right? It doesn't really matter. What matters is that you're able to see the divergence. So you could set it a little higher, a little lower. It really wouldn't make that much difference. But the point is here, if you're watching this 5-minute chart, and we have, of course, the raw data of the premium right in here, we got this big spike up in the middle of the day yesterday. That was a real clear indication that this market was going to be rallying today. That in the middle of the day, that's pretty unusual. So that was a good indication that going long made sense. And really, you wouldn't want to use this necessarily for trading. A 5-minute chart's way, way, way slow. And look, we just hit 86.75 new high for the day. 88.25 is the target. By the way, I want to put in a order there. Come back. All right, so you can see how the premium on this 5-minute chart, turned right here toward the bottom, and it's been moving up ever since. So if we go to a 1-minute chart, all right, same data, 1-minute chart, and we get a little better feel for the movement. And just notice the this indicator here, the TSC, that's what we're going to call it. It doesn't really matter how it works. But what matters is that as the premium is cycling, it can show us that divergence real clearly. So as we came into this low here, all right, we were at a higher low Look at this indicator here compared to here. There's a real clear divergence. Now we came down, we hit this low, but as we were tagging that low price, the indicator moved up. When we move down here, okay, to that low, see where the level was compared to here. Again, nice indication of divergence. Now we dropped into a new low here. That's kind of a, that's maybe an area of potential retracement. But by the same token, we were moving up on the premium on the raw data. So we'll just have to observe that. But right now the target is 88.25. I'd like to take another minute and just talk a little bit about the Divergence Hunter. In essence, what this is a moving standard deviation based on however many bars back you choose to use. This is 1 minute chart, 20 bars back. This is a moving standard deviation. And what's intriguing to me about this is that it manages to give us a very clear picture of how far the market is willing to move before it pivots. And on the average, using this particular setting, we can move 2 standard deviations very easily before a pivot takes place. If we go much more than that, if we go 3 standard deviations, then the probability is very likely that this market will pivot. So if you just take this low here, we moved through the first, I should mention, the white line is the median, pardon me, the mean. So 1 line above that is 1 standard deviation, 2 lines above that is 2 standard deviations. Same is true below the mean. Okay, we're right about there at the, let's just watch this. Notice where the premium is. Still moving up. But the TSC indicator has dropped. Okay, we just hit 88. It's pulling back. Look at the premium, highs of the premium. Let's get closer here. Highs of the premium have dropped off. Here we go. 88.25. Come on. Now SPY is at 278.99. All right, 278.99. Here we go. Come on. Take it up another tick. There it is. 27.88.25. Just hit it. We're out. And it's going a little higher. Okay. But you see how the indicator here has dropped. So that's not good for this continuing to move up. And if you look at the standard deviation movement here, all right, from above here, we moved down 2 standard deviations. We tried to make it up to 1, didn't quite make it, came back down, and then we moved up 1, and now we're trying to move up to 2 standard deviations above the mean. And if you look at the low compared to where we are now, you're right at about that point. You really are. Because if we move the mean down here, then you can see that the standard deviation movement here is roughly 2. So getting out up in here makes good sense for a variety of reasons. But knowing that the market is liable to pivot after the market moves roughly 2 standard deviations is a real helpful piece of information. Very nice. Look at the premium. Okay. Now what's nice about this particular chart, what I like about it is I can easily adjust to a smaller increment on both the premium and the ES very quickly by just using this particular setting. If I want to take it down to 15 seconds, I can do that, and I refresh all of the data. I wish we could go down further, but if we go down much further than that, if we go down to a tick chart, this thing will crap out because we've got 2 different data feeds. See, can't use a symbol, a multi-symbol chart for this. TradeStation needs to get on board. But anyway, this will take it down to 15 seconds, which, that's not bad. But now you can really see, using a 15-second chart, as we moved up here, look at where the premium was. It's the raw data, 49.13. And another tag that high, a little lower on the premium. Higher still, 45. And now we come up here, and we're at 35. Big divergence, okay? Big divergence on the premium here. Now, this stepped up. But although we were a little higher here, and I suspect we're going to go back up and we're going to test this high. But what I would be doing, normally I want to make a comparison between the highs, the most recent highs, and where we are now on this indicator. And this is really higher, as you can see. So that sort of tells me that chances are we're going to go back and test that. But by the same token, the raw data on the premium was definitely divergent here. Definitely divergent. But as we come back down now, and we hit that low, you can see where the premium is, relatively speaking. It's moving up again. So we're gonna go back and test that. Let's see if there's anything else. No, I think that should really do it. We made a nice move up. And now as we have our account positions demonstrated here, we're getting in on the long trade in here, took some profits quickly, and then let this thing ride all the way up to where we expected it to be. We had limit orders placed early on, approximately an hour ago. We knew where that was going, and we got out. Nice profit. All right, come take a demo and show you what we're doing. If you don't know how to read the premium, learn. You'll never regret it. It is a godsend when it comes to understanding how this market moves. Best indicator we've ever found. I'm Rod Kusin, Spooman for Risk.